Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Are gold stocks on the verge of breaking out? I'm Paul Harris of Kitco Mining here at the 2024 Precious Metals Summit in Beaver Creek, Colorado. Joining me today to answer this question is Matt Geiger, Managing Partner of MJG Capital. Matt, welcome back to Kitco.
Great to be joining you, Paul. How are you doing?
Well, thank you for being here. Now, Matt, you're an investor. What are you looking for here at this mining investment conference?
Sure. Well, for any conference that I go to, I have 4 or 5 objectives. I'd say first and foremost, we have 8 of our 18 positions in the MJG fund here in attendance. Excellent opportunity to catch up with the management teams of each and every one of them, get a sense of how they're doing on the working capital front, upcoming catalysts, and any senses of struggles behind the scenes or concerns that I should know about as an investor. So that's my number one aim at this conference. Second would be exchanging ideas with like-minded investors between lunches and dinners and coffee breaks in between, getting a sense of industry trends, which mineral belts are hot, which ones are not, any scuttlebutt on the M&A or deal front. That's extremely helpful for me, not necessarily for individual trades, but more getting a broader sense of where we're at in the market, and it can help inform my investment decision making and market outlook going forward. Third thing I look to do is to look at companies that I'm following that aren't yet invested in the fund, but I know the stories pretty well, getting an update on that front, and also a sense of when they're potentially financing next to see if there could be a fit for us. Fourth objective would be to leave with one good new idea. We'll only have 6 or 9 positions come into the fund in any given year, and I'll go to 7, 8, 9 conferences on an annual basis. So if I can get a single good new idea, that's very much worth my time. And then the final point is to promote the fund a little bit, both for new investment opportunities and also we're open-ended. So any new investors, family offices, high net worth individuals that want to come in, that's kind of the least important objective, but something that I also look to do at conferences.
Okay, so in terms of your own personal vox populi, what are some of the things you're hearing, some of the trends that you're sort of tapping into?
Well, it's all been about M&A. I mean, it's been an insane 6 weeks here, especially a part of the year that's supposed to be pretty slow. We're just getting out of the summer doldrums, just have come past Labor Day. But if you look at what's happened in the past 6 weeks, it's been pretty incredible. Starting off with the Filo deal, $4.1 billion in late July, then moving on to the all-cash bid from Gold Fields for Osisko Mining, $2.1 billion. Just last week, we had the Gatos Silver First Majestic tie-up. That's $1.3 billion there. Also, Kitco buying a 10% stake from Inami in Teck's QB mine in Chile. It's another 700 million CAD. And then just a couple days ago, of course, we have the Anglo Gold Centamin deal that's just hot off the press. And we're talking in a 6 week period here, 11.5 billion Canadian in terms of deals being done at a time of year where it's usually pretty quiet. So I can only imagine that there's more deals being hatched right now as we speak. Those, of course, there's going to be a 3, 4, even 6 month lag before those actually come to market. But we're really in the hot and heavy in terms of the M&A cycle at the moment.
Those, despite the critical mass of those deals, I think they're all very unique and distinct. And we could spend the rest of the afternoon picking those apart.
Sure.
So, but let's take a few minutes to do that, because I think there's some interesting trends there. I think one interesting thing about the Anglo Gold Ashanti and the Centamin deal is when you look at the relative share price change of both companies year to date, you can see how some companies are getting real leverage off their share price. Anglo Gold Ashanti up 60% year to date, Centamin only 20%. That deal is cash and stock. So Anglo Gold looking to leverage its stock. First Majestic, they need a new transaction because their last big transaction didn't really work out very well. In fact, it was a bit of a disaster, Jarrett Canyon. I think it was $460 million a few years ago, and that's not really gone anywhere. From your view of these transactions, what are some of the trends you've picked out there?
Well, the 2 that jump out to me, I'll touch on the Centamin deal. Firstly, Sukari is a wonderful asset. It's a true tier 1 asset, 500,000 ounces per annum of production potential there. 10 plus years of mine life. And I think that could go a lot longer. I know Centamin's hitting the ground pretty hard, kind of in the 10, 20, 30 kilometers around Sukari, looking for satellite deposits that can help turn that mine life into closer to 15 or 20 years. So I understand the attractiveness from Anglo Gold's perspective. Also, as you mentioned, their share prices rocked and rolled this year, especially relative to Centamin. So they're sitting on more expensive paper than they were just 9 months ago. With that said, I'm a little surprised by it. Firstly, I think AngloGold has a true crown jewel with their expanded silicon project in Nevada. That is a real company maker. And it seemed to me that the company's center of gravity was shifting to North America. You actually saw their headquarters move from South Africa to Denver within the past couple of years. So it was a little bit of a head scratcher that they're willing to dilute their equity holders by 16% in order to pursue this deal. But again, I think their relative share price performance to sentiment help get them over the hump there. I'll also just touch on the Filo deal. I know that was 6 weeks in the past, but I think that's a great example. Jamie Beck and the Lundins backing the deal there of really understanding the Lassonde curve and how the mining development's life cycle really works from an investment perspective. We were just getting at the point where the project was dipping into the period of apathy known as the orphan phase as well. So I think they timed that exit pretty astutely. And I think there's a decent chance that BHP moved when they did, due to the Filo guys floating the possibility of spinning out a 2% NSR into another vehicle. And we know these big mining companies love unencumbered assets, and that to me probably lit a fire under BHP's butt to get moving on that deal. And I think they played their cards there very well. They're looking at hundreds of millions of dollars and 10 plus years, in my opinion, before we could dream of first production there. So I think they chose an astute time to exit and take the bird in hand.
Yeah, royalties are kryptonite to the producers, aren't they?
That's right.
I think you're being a bit a bit overly optimistic with orphan phase. It's colloquially known as the Valley of Death
Yes.
for a reason. Let's talk a little bit about some other transactions. Let's talk about Windfall and Osisko and Goldfields. One of the noticeable things there, Windfall is a very high-grade asset, large resource. There aren't that many of those left. This week, although it's not an M&A transaction, it was a couple of years ago, Kinross Gold and Great Bear Resources. Kinross put out a PEA on Great Bear this week, and what was 2 years ago looking like, the market didn't really like the transaction. The market thought when Kinross put out an initial resource that it underwhelmed. But the market really seems to have taken to the Great Bear PEA. Kinross up 5 or 6% on the day. Windfall's a big deposit. Great Bear's a big deposit. There's not many of them there. Are the big gold companies, are we starting to see the sort of fear of missing out aspect coming into M&A activity?
I think we are. And you just have to look at the share price action of some of these later stage development plays and how they responded to both of these takeouts. You look at the Rupert Resources of the world, or the Skenas, or the Artemis Golds that are getting close to production there at Blackwater. So I think between Filo and the Osisko Windfall deal that you mentioned, we're talking $4.9 billion in cash changing hands in those two transactions. Now, the deals aren't closing. In the case of Osisko Mining, it should be later this year. In the case of Filo, it should be in early 2025. That's a significant amount of money. And I'm not saying that money is going to trickle down into one's favorite, $20 million junior Explorco. But I do think that a good chunk of that money is going to stay within the junior mining ecosystem. We'll probably go to those later stage development projects that I just discussed that are likely looking for a home here, and probably will find a home over the next 6 or 12 months. But I think it's positive news for the entire space for sure. And just touching on the Great Bear PEA, excellent numbers. That project's going to be a real moneymaker. I feel confident about that. I think the market reaction was maybe a little over exuberant, because one has to remember that Kinross paid $1.8 billion for that asset already. So they're going to have to sink, $1.2 billion in for the initial capex, a couple $100 million for, pre-production expenses. One also has to factor in the money that's already been spent on that acquisition. So I think the jury's still out on whether they can really execute there and stick the landing, but the numbers look great, and I think that's a real mine in the making.
I think it really shows the leverage to the gold price that's possible. I think, please correct me if I'm wrong, the base case analysis was at $1,900 per ounce gold, and it had an NPV at 5% discount rate of 1.9 billion. At current gold price, 2,500, that goes up to 3.3 billion.
Just sings, absolutely. Yeah, I think it's overly conservative at 1,900 gold, but if I were in their position, I would do the same thing, just to demonstrate to the market how economic this asset truly is. But I think it's reasonable in today's environment for investors to be plugging in $2,200, $2,300 into their model. I don't view that as overly aggressive. So I think 1,900 is quite conservative, but that speaks to the quality of the asset, no doubt.
Is there one M&A transaction you think is crying out to happen?
Oh, putting me on the spot there. Well, I think it's been relatively well documented, but I've followed the Silicon story very closely, and I touched on that briefly. But we're shareholders of Altius Minerals. I've been longtime shareholders there. It's one of our largest positions in the fund. They own a 1.5% royalty over the expanded Silicon project. Also, our ownership in Altius makes us indirect shareholders of Origin, which in turn owns a 1% NSR over a smaller percentage of the overall project, but still they have the real meat in potatoes there, which is the Silicon Marlin deposit. So Altius has been pretty clear to the market that they're examining potential homes for that royalty. They've also left open the possibility that they're going to keep it to themselves. There is a bit of an arbitration dispute going on, which we should get a final ruling. That's between Altius and the owners, Anglo Gold Ashanti, to determine the true extent of the royalty. But I think once that is put to bed and determined, Altius and Origin will probably have some serious think about whether to transact with some of the largest royalty companies in the world, because that is truly a cornerstone royalty for even the Francos and the Royals and the Wheatons of the world, no doubt.
Okay, excellent. Now, you mentioned that some of these transactions will throw off sort of $4.9 billion of cash. I imagine, as you mentioned, a lot of the companies here will hope that some of that is recycled back into the sector. And I think that touches on a point that despite the fact gold is at $2,500 per ounce, there doesn't seem to be a lot of money available for the exploration sector.
Yeah, so I definitely feel the vibes here as well. It feels a little gloomy. Definitely not as despondent as last year. Don't get me wrong, but you don't have that palpable excitement that I've felt in periods like 2020 or 2021. I will say the data really doesn't support this vibe that I'm sensing. TMX Group just a few weeks ago came out with some pretty surprising data, I thought, and they looked at all money raised by mining issuers on the TSX and the TSX Ventures, and it tallied $6.4 billion in the first half of 2024. If you look back to the first half of 2023, same period year prior, $4 billion. If you look back to 2022, it was $4 billion for the entire year. So the TMX Group came out and said this is the largest amount of money raised in the first half of the year in the past 10 years, if not ever. So juniors, well, I'd say the space more generally is actually pretty well cashed up. I think that's one of the arguments in favor of mining stocks, at least over the next 6 to 9 months, is that they're more cashed up than they've been in many years. That means less financings, and that means more news flow. And all things equal, those two factors result in higher share prices. So I think the data belies, but of course it is a case of the haves and the have-nots. That money is not being raised, equally distributed across the whole junior ecosystem. And
so more money, but perhaps in more concentrated hands and more concentrated names.
And that's the way that it normally is. It's never an even distribution, but I still think if you look at the absolute figures, we're actually doing pretty decent on the capital raising front as an industry in North America.
You also mentioned that one of the reasons you're here, one of the things on your list is obtaining new ideas.
Sure.
What new ideas have come to you?
I'm going to have to keep those to myself, I think.
Feel free to share. Very generous here.
Yeah, a lot of interesting talk about potential M&A targets and also mineral belts of interest. Done quite a bit of thinking about the Nubian Shield here, and I've talked to at least a couple groups just in the past half day about looking to go into Saudi Arabia. So we've seen some movement there in terms of Barrick and Friedland. There's also Royal Road Minerals is also active there, but I think there are more than a few juniors that are kind of testing the waters there, and we could see some groups announce tangible deals and an entrance formally into the country in the coming few months. So I'm interested to see that. I'm a big fan of the ANS. Difficult place to operate, a lot of volatility there politically and in terms of jurisdictional stability, but a wonderful mineral belt hosting all sorts of different types of mineralization, whether it's orogenic gold, massive EMS deposits, porphyry mineralization as well. And because of where it's located in the world, it's very underexplored. So I remain excited about that region, and I have been for a couple of years now.
Now, we've seen some of the gold producers, their share prices start to move. You mentioned some of the developers are starting to get some excitement behind them because of some of the transactions that are happening. But for the junior stocks, are we on the verge of a rebound, or is that still some ways over the rainbow?
Yeah, at a risk of getting too far out of my skis here, I think if the broader stock market stays generally buoyant, as it has been, we're actually very well poised for the reasons that we've discussed already. The amount of money that's been raised in the past 6 to 9 months, Gold price at all-time highs, and as we know, close to 50% of all juniors are focused on gold. And also gold acts as a bellwether more often than not for the rest of the metal space. We saw gold rocket for the first 9 months in 2016. That marked the end of the 2011 to 2015 bear market. We saw gold, charge out of the COVID bottoms in spring of 2020, and then that marked a really good run in commodities in 2021 and then through 2022. So I think that's in our favor. And then, as discussed, the M&A activity, particularly the all-cash deals, the Filos, $2.8 billion going into investors' hands, Osisko seeing $2.1 billion going into investors' hands. I think the combination of those three aspects bodes very well, even for some of the smaller names. But of course, that does assume that the broader markets hang in there. Juniors are cheap. They've largely missed out on this risk asset run that we've seen, from the rate hike tantrum in mid-2022. But just because they're cheap does not mean they will not get cheaper if there is, a larger scale liquidity panic. We saw, some worrying signs in early August of, skittishness in the broader market that seems to have rectified. But if you see something long lasting, despite juniors being cheap in the short term, they can always get cheaper, especially if people go risk off.
Okay, let's extend this concept a little bit. The gold producers are starting to make some good cash. The second quarter, we saw margin expansion pretty much across the board, one or two exceptions. Costs were still going up, but margins, because of the gold price, were expanding faster. A lot of people expecting the oil price, energy prices to fall.
That's right.
So it's quite possible that the gold producers will have 2, maybe 3, even 4 quarters of further increasing margins if the gold price continues ticking up, fuel prices ticking down.
Goldilocks zone, right?
Yeah, so they could really add some cash. The question then becomes, what do they do with that? More dividends, share buybacks, or buying other companies?
Yep, M&A, or doing deals with smaller groups, whether that's strategic investments at the top co level or doing joint venture or earning deals on the asset level. I think we see all of the above. And I'll just note, and maybe this is the optimist in me, but if you look to recent spikes in gold equities, like if you look in the April 2020 to late 2020 timeframe, gold price, juniors and seniors all rallied in tandem. Same thing happened in the first 9 months of 2016. Those jolts of enthusiasm proved to be short-lived. So I actually think that we're currently seeing the kind of more natural cycle play out, where you see the gold price move, you then see people start to trickle into the largest of producers, then into the mid tiers. So this could speak on from an optimistic standpoint. This could speak to a more drawn out, longer cycle here than more of a 6 to 9 month shot of adrenaline like we've seen a couple times in the past 5 or 6 years.
Okay, how do you think the rest of the year is going to play out for gold in the gold space?
I think it looks quite good. I think it looks no sign of slowdowns in central bank buying. I know there's been a few months of the Chinese central bank reporting, at least publicly, that there's not buying going on. I think there's a strong case to be made that they may not be being straightforward with the investment community. Look, even if the gold price just stays flat, just where it is, this is a wonderful price for these producers. And you mentioned oil price margins expanding. Like even though we have no exposure actually to the larger gold price, gold producers, our largest company by market cap has a $1 billion market capitalization, and our immediate market cap within the MJG portfolio is 40 million Canadians, or very much on the junior end of the spectrum. But as somebody involved with the space, I'm thrilled to see cash come on the balance sheets here, finally start to attract the interests of generalists and folks that have never invested in gold, or maybe were last involved in the 2009 to 2011 time period and then haven't looked back at the space since. So I think there's a lot of money on the sidelines, and you can look at all sorts of different sets of data, but the disparity between where the gold price is, where the producers are trading, has rarely, if ever, been this wide. It's a great opportunity, I think.
Exciting days ahead.
That is right.
Excellent. Well, Matt Geiger, thank you very much for joining us today.
That was fun. Thank you, Paul.
We have a lot more to come from the 2024 Precious Metal Summit, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.